Alright guys, welcome back, Driving Trader. And today, as you can see, I named the title here Strait of whatever. And of course we're talking about the Strait of Hormuz. And the reason I titled it that way is because it's getting a lot of press, and maybe a bit too much press in terms of the attention that's being paid to it. Now, don't get me wrong, it's a serious situation, and there's no need to make it smaller, but there's also not a need to make it any larger than it is when you are talking about something like trading the markets, and that's what the channel is about. And so while of course it's creating a bottleneck, the issues that the Strait is having currently, and it will be affecting countries outside of North America, quite a lot, but at least I am here in North America, and I think most of anyone viewing this channel. And in terms of the markets that we trade, the effect may have already happened. We may be at the peak of it, and that's the reason that I say whatever, because this is information that's known. So we all know what's happened there at the Strait, and the current conflict, and it sucks, but the idea is that if you were to look at just that and base your trades on that, you might really want to right now go into oil, go into all those all oil companies, and you may be justifying it by saying that for example, ExxonMobil is such a great company, and they've got great cash positions and whatnot. But the reality is that their stock has gone up 60 to 70% in a short amount of time, for relatively speaking, for that type of a company. So again, that's why I say Strait of whatever. It is sometimes better to ignore these news, this type of news, especially as it gets more popular. And exactly for the reason that sometimes, and I would say often, the edge is in, let's say, news or some information or some mental processing of information that's unique to the user, unique to you, unique to me. So maybe there's something else that that can help you. But when everyone is talking about the Strait, and oil has already gone up, nearly doubled, guys. And we're talking, weeks, barely months. And oil companies, equities going up same amount. This is something that would seem to me just extended, and the cure for high prices is always high prices. We are at that territory. Check out the the screen here for the chart for oil, and you'll see that we've got a huge pop. And historically speaking, oil tends to go down after something like that. It would totally make sense to me from my perspective, being that we're sort of like weeks into this, and I liked oil at 50s and 60s. And now we are where we are. So to me, it would make sense for it to just take a look at this beautiful area. Wow. For me, it would make sense for oil to come down and not, continue the path that it is going at. Now, that is not to say that if you're someone who can stomach the volatility, that it would go down and up and down and up and down a lot, and then maybe up a lot and above closer to 200 a barrel in a few years. But most people aren't like that, and if you want to avoid that disappointment, or if you are just simply looking to get into something that's namely cheap, oil would not be that currently. That's where I'm at, and again, that's why I'm thinking straight of whatever. All right, take a look at Bitcoin. Chart for Bitcoin, not related to the Strait of Hormuz, but I'm guessing it's kind of like bad news for equities and economies, but really only good news for oil. And with that being the case, Bitcoin is not looking great at initial look, but also in terms of the price, it's half off. So that's like, if you ask me, wow, this is a talented person. If you ask me, getting into something at half off is rarely ever, for something that's established anyways, and it's my own bias, but to me, in Bitcoin, this would be rarely a bad positioning, really a bad entry. So do with that what you will. Could it go down another 50%? Yeah, it could. I don't think it's likely. Maybe another 20%. Maybe we'll see 50s, maybe 40s. I think worst case. But there's so much money in the system that, to me, it's kind of like locked in. It's kind of like just the value of everything. There's not a reason for things to all of a sudden come down. They almost can't, because there's so much money created and so many people around in this system. And Bitcoin is just a part of that system. And there's more and more money pouring into it, every day. So, yeah, I just think that it's, 50% off, probably a good entry, a good, it's getting cheap, it's getting there. And a good strategy would be just to leave some money on the side, some dry powder. Being in cash is a position, and if you can be in cash somewhat, leave some cash on the side, and in case Bitcoin goes down, just get in some more. This is money that you've left specifically for that purpose. So, what a great way to use it, and you would be happy, in a sense, Bitcoin went down. If it didn't, then great, then your investment's going up. But if it did go down, then your plan is kind of materializing, and you're getting more Bitcoin, you're getting more of that asset. That's, of course, everything's predicated on, the math and idea that Bitcoin will go, in my opinion, to about, $250,000 in the next few years. And that's where it would have been so obvious, starting from that point in the chart that we see today. If you have a look at it right now, and just use your imagination, that it goes up, and what that chart would look like, instead of the current thinking, the current trend that it would go down. And I'm only saying that because it's gone down, quite a bit already. There's been quite a bit of beating. That's why I have that attitude. Okay, so that's Bitcoin, oil. We've gone over that. Stock market, the S&P 500. Quick look at that, and I would say there, it's kind of looking like, if you really are zooming in, it kind of looks like, Bitcoin, it's kind of following some of the tech stuff, and but it's still at highs. It's not even 10% off of the highs just yet, although we got there, but now we're kind of coming back up. It's really hard to say what would happen. What I can say is, today I thought about it, and if we're looking at a long-term view, as we are in this chart, if this turns to be a bottom, and let's say there is some monetary injection, maybe even a cutting of interest rates, which would be such an easy lever to pull. I mean, anything, even 0.25%, anything would do to, I think, boost the markets, and we may see S&P of 8,000, so another 20-25% up from here within the next couple of years, a year and a half. 25%. That's very possible, and that could be then the top. But I would say that if that's not the case and we kind of keep on going sideways, then if we have another leg down, we could be starting to trend towards 20% down on the S&P from the highs, which in my opinion would be very healthy. And that's where I would go, not necessarily that point, but towards that point I would be putting more cash, more of that dry powder back into the market, and specifically this is with the S&P 500. So that's my thinking there. The S&P 500, just as long as the US still has reserves, would be the best place to go for stability and growth. And so that would be the case, and just the more so if we go down another 10%. Right now, well, maybe we're 10% more, or something like that. We're about 10% down, so maybe we're about 10% more attractive as a market right now to an investor. Maybe that would be the way to think about it. Okay, well, I guess that's really it for now. As you can see, it's a beautiful drive, so I'm just gonna enjoy the drive here through the park. Have a great day. See you in the next one. Leave some comments, especially if you disagree. Leave some comments. Cheers. Bye.